what it is, how's it going. I don't know how the volume keeps coming up on this. This is crazy. Alright, the volume always pops up. But yo, Caleb, what's up? What's up? AJ, what's up? So we're just going to talk about investing in stocks, dividends, how you can invest in stocks for beginners to make money, passive income. Thank y'all for tapping in. Yo, I see you, AJ. Yo, Cartucho Corona, Lee Diaz. Thank y'all so much. So let's go ahead and get started. You guys know, gotta kick off the disclaimer first. So disclaimer, disclosure, please note that the following is not legal advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, with that being said, we can officially kick it off. You know, you got to get that disclaimer in there. Big shout out to all 6 or 7 of you that are in here. Caleb, thanks for the likes. I appreciate you, my guy. Thank you. Denny Smith, I see you. Doko, M House 1000, 4X000. Thank you all for the likes. Thank you. Let's run it up. So we're going to make this really easy and really simple for the beginners out there. We want to talk about investing in stocks, specifically dividend stocks. So if you're not familiar with what dividend stocks are, they are basically shares of a company, stocks in a publicly traded company. So we're talking about companies like Apple, Microsoft, things of that nature that pay you a little bit of money as long as you hold the stock shares. So if you own the stocks, you're an owner in that company, you're an investor, but these particular stocks that are known as dividend stocks will pay you to own them. So what I want to show the beginners and the new folks out there are some of the things that I look for or that you should look for if you want to invest in stocks that pay a dividend. So with that being said, if you guys have any somebody said, why you put yourself in the background? Just so people can see my face. Sometimes I hear that it's better that your audience can see your face. So I just have my face right here so y'all can see what's going on. But we're talking about dividend stocks. Shout out to Teal for that comment. But if there's any tickers, any companies that you want me to look at and break it down on what I would look for, let's start there. But with that being said, until you guys give me some companies that you want me to look at, I'm still cracking up at Teal's comment. Until you give me some companies that you want me to look at, I'll start off with one of the companies that I just recently added to my portfolio. So I'll show you guys the proof in my Discord channel right here. I'll show you. So here's a little sneak shot of my Discord channel. We'll go to the dividends, my Discord server. We'll go to the dividends channel. As you can see, just on Friday, I added just a partial share of ADP. So ADP is a large publicly traded company. It's one of the biggest payroll processors of the world. So most companies, or a lot of them anyway, are using ADP to process payroll. So if you got a job, especially if you work at a big company like a bank or something like that that's really huge, they're probably using ADP to help process the payroll. And payroll is basically how you get your check, right? You work for 2 weeks, they pay you for your 2 weeks. So this was a company that I just recently added to my dividend portfolio. But what we want to look at is what are the important things that you should consider before you invest in a company that pays dividends, that has dividend stocks. So we'll start off with ADP. But if you guys have any particular companies that you want to take a look at, just drop them in the chat. Any questions or anything like that. Just to reiterate, this session right now, this live session, is to give the new investors, the beginning investors, a bit of insight on what to look for when you're investing in dividend stocks. So let's go take a look at ADP. Now, the first thing that I do, no matter what, when somebody's like, yo, G, take a look at this company. What do you think? They pay dividends. Is it good? Is it this or is it that? The first thing that I do 9 times out of 10, 100 times, 10 times out of 10, is I go to a website called Seeking Alpha. Yo, Malik, big shout out. Thanks for the follow. Thank y'all for the likes. I appreciate it. So the beginning step, write this down. If you're in right now, if you're in my live, and you're wanting to learn about investing in dividend stocks, this is step 1. The number one thing that I do 10 times out of 10 when I start my research is I go to a company or I go to a website called Seeking Alpha. This is it right here, Seeking Alpha. This is step one in investing in or researching dividend stocks. Now, the reason why I use Seeking Alpha and why it is step one is because they make it very, very easy to get a summary of a company's financials and their dividend health. So this is what Seeking Alpha looks like. Of course, I kind of got to shrink it down so it can fit onto the screen for y'all to see it on TikTok. But here's what Seeking Alpha looks like. And what we want to take a look at is ADP. Yo, Chico Bokums or Bokums. I'm trying to get these names right. So here's ADP, Automatic Data Processing. Like I said, they're one of the largest payroll processors in the world. So if you work at a job, Panera, if you work at McDonald's, if you work at Best Buy, if you work at, any one of the mainstream companies, even companies smaller than those, there's a good chance that they're probably using ADP to process payroll, meaning that they use ADP to cut you your check for working to put the money in your bank account. Now, currently, ADP is at $243 a share. We don't let the amount of a company, the price of their share, scare us. We get into that a little bit later. The first thing we want to take a look at is their financials and their dividend health. And this is why I say Seeking Alpha is where you want to start, because Seeking Alpha has a dividend scorecard. And the dividend scorecard makes it really, really easy to get an idea of what's going on. So you go to Seeking Alpha, you search for the company that you're looking for. In this moment right now, we're talking about ADP. And then you want to head over to the dividends button, the dividends tab. Now, Seeking Alpha has this dividend scorecard right here that will really help you out. Let me shrink it down just a little bit more so we all can see all the information. All right, let's go up, Where's the scorecard? Okay, this thing is all in the way. Jesus, ads are crazy. Crazy with these ads. All right, here we go. So here's the dividend scorecard. Let me move it over just a bit so we can see it. All right, now all of these numbers that you see here are very, very important when it comes to investing in a company, right? Now, the first one that I want to start off with is the dividend yield right over here on the left-hand side. Now, dividend yield, I'll read the formal definition from Seeking Alpha, is a financial ratio that tells you the percentage of a company's share price that it pays out in dividends each year. So this says 2.3%. But an easier way to understand this is by using the number 100, right? So what this tells you is that if you invested $100 in ADP, you're going to get $2.30 in the form of dividends each year. That's what that's telling you. If you invest $100 in ADP, each year you're going to get $2.30 in dividends. Now, you typically want this percentage to be lower. And we're going to figure out, or we're going to see in a minute, why having a high dividend yield could be a sign of trouble for companies. Now, the next thing is the annual payout. And if you guys have any questions, please don't hesitate. This is for the beginners out there. This is for people that may be interested in investing in dividends. It's already getting a little hot. Yo, I'm already hot. Thank y'all for the likes. Thank y'all for rocking with me. I see y'all. So we're talking about investing in dividend stocks. We just covered the dividend yield, which means for every $100 that you invest in this company, you're going to get $2.30 a year in dividends. Now, the next thing we want to talk about is the annual payout or the forward payout. And basically what this tells you is for every one full whole share that you own, you're going to get $5.60 a year in dividend income. So this is telling you, hey, if you own one full share of ADP at the top here, one full share, you're going to get $5.60 in dividend income. Now, the next thing that we want to talk about is the payout ratio. Now, this is a very, very important number. And for dividend investors, I want you to write this down. So the first thing that you wrote down when you're talking about doing your research for dividend stocks is going to the website Seeking Alpha. Then the second thing I want you to write down, which is really, really important, is this payout ratio. So basically, the payout ratio is this. For every $100, we're going to use that as an example to make the number simple. For every $100 the company makes in revenue, this percentage here represents how much they have to pay out to their shareholders in the form of dividends. So if this company, in this case, we're looking at ADP, if ADP makes $100 in revenue, they've got to pay out almost 60% of that in the form of dividends to their shareholders. So they make $100, about $60 is going out to their shareholders in dividends, and then the remaining $40, they have to use that to make new products, get new customers, expand the business, do marketing and advertising, pay for other things. So when you're looking at a company's payout ratio when it comes to dividend stocks, you want to make sure the payout ratio is lower and far away from 100. A good general rule of thumb is that you want a payout ratio below 50%. Let me check the chat, make sure I'm not missing any of y'all questions or comments. All right, big shout out to Big Ship 417. What's the difference between dividends and options? All right, good question. Big difference. Big difference. So dividends are basically a payment you get for owning shares of a company, for owning stocks. So let's say you own 5 shares of Apple. Apple's going to pay you for being an owner. They're going to pay you a little bit of money, some dividends of being an owner, and that's known as passive income. That's my whole thing, Passive Income University. You guys can check out my Discord. Options, right? Options doesn't pay you any money just for simply holding the contract. You've got to buy the contract at a certain price and then sell it when the value of that contract gets higher. So that's what options are. And options are much more quicker and related to shorter amount of times. When you've got dividend stocks, it's all about holding it for a long time. So I'll give you another way to look at it. With options contracts, they have an expiration. With dividend stocks and holding dividend stocks, there is no expiration. You can hold them forever. Options contracts, you might get one that expires next week, next month, next year, but eventually those contracts are going to expire, and there's no guarantee that you're going to get money for having those contracts. Whereas with dividends, as long as you hold the shares, the stock, the company's going to pay you. So hope that kind of answers your question there. Dividends, you're holding the stock directly. Of course, options, you're trading contracts that kind of represent the stocks. You don't necessarily own the stocks directly. Good question. Big shout out to Big Ship 417. Thank you for the follow. Thank y'all for the likes. Go ahead and share this with anybody that might be interested in learning the basics when it comes to dividend investing and the basics to trying to do research. So quick recap. If you're new, quick recap. If you're taking your notes, step 1, go to seekingalpha.com. Step 2, you want to make sure you make a note of the company's dividend scorecard. In this case, we're looking at ADP. Their payout ratio, we'll just round it up, is 60%. That means for every $100 that ADP makes in revenue, they've got to pay out $60 in the form of dividends to their shareholders. Now, we don't want this number to be high. You actually want this number to be low. The lower this number, the better. Because if they're paying out most of their money in dividends to their shareholders, that means they don't have money left over to take care of other business operations, right? Marketing, developing new products, expanding, taking care of expenses, all that kind of stuff. Now, the next thing that's important when it comes to dividend investing is this 5-year growth rate. And for some companies, some industries, you may or may put different kinds of weight on this. But basically what this tells us is that in the last 5 years, their dividend has grown 12.36%, which is good. So just imagine you invest in a company, and after you buy the shares, you're just getting a raise. Remember, there's nothing you have to do. You're not having to do an annual performance review with your boss. You're not having to sit in traffic. You're not having to deal with people at work that you don't like, microaggressions, people being rude, dealing with all that kind of madness, sitting through meetings, none of that. So just imagine you buy shares in a company, you just let it sit, and not only are you getting paid, but they're increasing that payment to you. They increase the payment to you. And then the next thing that we want to talk about here is the dividend growth. And what this is saying to us is that for the last 25 years, this company, in this case, ADP, for the last 25 years, every year, ADP has increased their dividend. So let's just take a quick moment and go over to another side. I'll open up another tab and we can take a look. But as long as you guys got questions, yo, shout out to Lamont. Let's see who's all in here in the chat so far. Mandisha Wilkins, Big Ship, and user 1233-181664687. Big shout out to y'all. I appreciate y'all rocking with me, spending time with me. If there's any questions that you have, let me know. But what we're taking a look at right now is I want to show y'all what that looks like on Seeking Alpha, showing that every year ADP has raised their dividend. So just imagine, you can invest in a company and every year you're getting a raise, and you don't have to do all that nonsense, all that headache, all that stress that you have to do to get a raise at your normal job. So this is why dividend investing is really, really powerful. All right, so we're looking at ADP. We're going to click on this dividends tab, and then we want to look at the dividends history right over here on the right hand side. We're going to look at dividends history. Yo, DCannon375, big shout out to you. Thank you for the follow. So just look at this. Let's go ahead and scroll down. We see in 2024, it's $1.40 for every share. But look at that, just in 2023, they raised it from $1.25. 2022, they raised it from $1.04. 2021, they raised it from 93 cents. 2020, 91 cents. So just imagine, you buy a bunch of shares of a company that pays dividends, and every year they're increasing how much they're paying you just for holding the company. So that's why dividend investing and passive income investing is one of my favorite things. You do what you need to do. You buy some assets, you let them sit, and then they continue to pay you, and they increase those payments over time, and you don't have to do anything extra. Unlike working at a job where every year you got to bust your ASS, every year you got to deal with all this stress, every year you got to go through all this stuff just in the hopes that maybe your boss or your employer gives you a raise. When you're investing in solid companies that pay dividends, you're going to get a raise whether or not you do anything. So the name of the game is to start finding these companies and investing in them early on, so that sooner you start to reap the benefits of increased dividends and that passive income growing. If you feel me, just rock with me. If you understand what I'm saying, give me a thumbs up or give me a 1 in the chat, just to let me know that you're rocking with me. I know we only got a handful of people in here. Catch up shorty, thanks for joining. But just give me a thumbs up or some kind of indication if that makes sense to you. Big shout out to Big Ship. Thank you. User 1233-181664687. I see you. I got that one. All right. So I wanted to show y'all what that looks like. And you could keep scrolling back, right? 91 cents to 79, 79, 69 cents, 63, 57. You see, as we go back further and further in time, you can see that this company, ADP, has consistently raised their dividend every year. So I'll keep saying it. Just imagine, you buy some shares today, and they're going to consistently pay you, and they're going to raise that dividend no matter what's going on, and you don't have to do nothing extra. All right, now let's go back to the dividend scorecard. So we talked about the dividend yield. We talked about the annual payout. We talked about the payout ratio. We even talked about the 5-year growth rate and the dividend growth, showing that for the last 25 years, they've increased their dividend. And then down here, what this tells you is a lot about their most recent dividend. So what this is saying is ADP announced to the public, hey, our dividend is $1.40 for every share that you own. So every one share that you own, when we pay, we're going to pay you $1.40 for that. Now over here, to help you make sense of what that means, they also pay quarterly. And if you don't know what quarterly means, that means that they're going to pay once every 3 months. Once every 3 months or 4 times a year. Quarterly, you will get this payment. So quarterly, you're going to get $1.40 if you own 1 share. If you own 2 shares, that turns into $2.80. Now think about how quickly that could grow. If you own 3 shares, now you're over in the $4 range, right? Things of that nature. So what this says is ADP pays passive income dividends quarterly once every 3 months, and you're going to get $1.40 for every share that you own. So the name of the game, just to make this super simple and to make the cheat code, there's 2 big components. And write this down if you're still rocking with me, if you're still in the chat. There's 2 big components that are related to dividend investing. These are the biggest things. These are the things that help you in your mindset that's going to give you success. It's time in the market, right? How long have you been invested? So the sooner you invest, the better. And then the second thing is consistently adding to your position. That's where you're going to see the compounding. I know at the very, very beginning, when you see these numbers, you automatically think, okay, well, $1.40 is not going to change my life, and it's going to take me a lot of money before I start seeing some passive income that's really going to make things easier. And that's why the sooner you start, the better it's going to be. The more you keep putting it off and putting it off, the harder it's going to be for you to see the tangible aspects of dividend investing. I'll give you an example. Like I just showed y'all, I just restarted my dividend portfolio. I just added some shares to my portfolio. And with $500 based off of the companies that I invested in, I'm already getting $20 a year in dividend income. So just imagine you keep adding to that, adding to it, and before you know it, you'll be at $500 a year in passive income, then $1,000, then the 1,000 turns into 2,000, that 2,000 turns into 3,000, 3,000 turns into 6, things like that. It's all about that compounding. You guys think about, you know, the man that everybody always talks about, Warren Buffett, right? All right, let's get back to it. So that's just the long and short of the dividend scorecard. Just to recap, to give y'all notes, when it comes to the payout ratio, a good rule of thumb is you want this to be 50% or below. But as you research the company, you might give this a little bit more breathing room. You definitely want to see that they've been growing the dividend year over year over year. And then you want to take a look at the dividend yield. We don't want this to be a high number. If you start to see a dividend yield that's over 5%, it's 8%, 9%, 10%, we want to be very, very careful because it becomes very hard to sustain such a high dividend yield on a low share price. That means the company's having to scramble and find other places where they're going to get the money to pay the shareholders. Let me double check, make sure I didn't miss anybody's questions, any comments. All right, so now we want to take a look at the financials. And we're going to keep this very high level. We're going to keep this very just for the beginners out there, just some key things when you're doing your initial research when it comes to dividend investing. And so when you're on Seeking Alpha, you want to click on the financials button. And then after you click on financials, let me move that over just a little bit. You want to go to the cash flow statement. Now, there's a lot of nuances, a lot of numbers and different things like that to take a look at. But we're going to focus on the very beginning, most important things for people that are new when it comes to this type of investing, and which is known as the net income. Now, net income is basically another word for profit. Now, there's a lot of different ways depending on the company, the sector, the accounting, and all that kind of stuff that people want to calculate profit. But net income is one of the main ways in the industry and in finance that people determine profit. So the first thing that you want to see is that year over year, the company is becoming more and more profitable, right? So we see here in June of 2019, ADP made $2.2 billion, just under 2.3. They grew it in 2020 to 2.4. In 2021, that became 2.5. 2022, they made 2.9. And then in 2023, they made $3.4 billion. So we see nice, consistent year over year growth with their profits. That's a good sign. So that's one thing you want to take a note of when you're doing your dividend investing. And then the next thing that you want to take note of on the cash flow statement is what's known as free cash flow. We want to make sure, just like the net profit or the net income that increased year over year, we want to see that their free cash flow is also increasing year over year. So what we want to do is scroll on down to the bottom and we want to look for a term called free cash flow and unlevered. Here we go. These two line items right here, levered free cash flow and unlevered free cash flow. So if we go back, this is 2019, we see that it was just under 2 billion. Then they got over that 2 billion mark in 2020. Then they grew it to 3.6, and then they grew it to $5 billion of free cash flow. And then they had somewhat of a dip in 2023. But this is really good in terms of an indication of free cash flow. Now, if you don't know what free cash flow is, I have a very simple way to help you understand it. Think about a regular job where most of us get paid either once a month or once every 2 weeks. I think most Americans are used to getting paid once every 2 weeks. But what happens in the course of every 2 weeks, right? We have unexpected bills that pop up. If you got kids, you know how spontaneous that can be. You got things that you got to buy for them that just come up out of nowhere, or just life in general. You get a flat tire, things of that nature. And a lot of times for us, right, we don't have the cash flow right then and there. We might have to wait to buy or fix that problem until the next time we get paid. Hence that idea that most Americans are living paycheck to paycheck, right? So we might have to wait until the next time we get paid. Well, free cash flow is basically saying how often, how frequently are you getting paid, having cash on hand to take care of those unexpected expenses. So you want to see a company's ability to grow their free cash flow. That'll show that at any given moment in time, as expenses pop up, they got the money right in their pocket to take care of it and pay for it. So that's why you want to see free cash flow grow. So we took a look at the dividend scorecard. We took out just some key metrics that are really, really important, which is their net profit and their free cash flow. And then we want to keep going and taking a look at their peers, right? We want to see what their competition is like. And so this is why I always say start off with Seeking Alpha, because Seeking Alpha has a whole summary that makes it really easy to identify this information, which is a peers tab. And so if you want an idea of who are some of the competitors to ADP, you can come to this peers tab and see these different companies: Paychex, Paycom, Dayforce, Paylocity, so on and so forth. So Robert Half. So those are the considered competitors or peers to ADP. And then you will continue to do your analysis. You go check out those companies' financials and see what's going on. But now I got another tip. I got another heads up for y'all, the four of us that are in here rocking together. I appreciate you so much. Let me give another big shout out to y'all because it means a lot to me. Mandisha, thank you so much. I see you. It doesn't show me there are other people for some reason, but I'm thinking it's big ship. So thank y'all, thank y'all, thank y'all. And then I want to give you guys another website. So hopefully you wrote down Seeking Alpha. Yo, Miguel V78, thank you for coming through. Hopefully you wrote down Seeking Alpha. Now, the next website you want to put in your notes to help you with your dividend stock investing is a website, tipranks.com, right there, tipranks.com. Here's what it looks like. And so the dope thing about tipranks.com, and the reason why I use it, is because it will help you get a forecast of what a stock is expected to do over the next 12 months. Now, the way that the website works is that it takes a summary of different financial analysts, or more specifically stock analysts, what their predictions are for a particular company. So in this case, we're going to take a look at ADP, and we want to see what the analysts are saying ADP is going to be doing in the next month or the next year, over the next 12 months. All right, let's ads upon ads upon ads. All right. Let's see. All right, so we got analyst forecasts. Let's let this load up. Okay, so right now, if we go back to, well, we can all see it here, but right now, if we go back to seekingalpha.com, the current share price is $243 for ADP. And according to TipRanks, they're saying on average, based on all the analysts, so they had 12 ratings. And out of the 12 ratings, the 12 analysts that took a look at ADP, 8 of them are saying just hold it. 1 person is saying you should sell it right now if you have it in your portfolio. And then 3 other people are saying this is a good time to buy. Now, the average rating over the next 12 months is that ADP is going to be at $257 a share, which is basically 6% upside from the current price right now. So if you bought right now at $243 a share, by this time next year, you should be up 6%. Now, I know we live in this crazy time where people are like, no, I need 1,000%, I need 100%, I need a home run, I need a grand slam. But it is a good idea, and it shows you, yo, Phoenix Rivers, thanks for coming through, I see you. And then you can see the different forecasts from the different analysts, right? So on the high end, some of the analysts are saying ADP will be at $280 a share next year. The average is $257, which we just saw over here. And then the low end, we've got a few people that might be thinking that ADP is going to be at $235 a share. So with that being said, we've got 2 websites that you have in your tool chest that'll help you do your research when you're looking for a company to invest in for dividends. You've got seekingalpha.com. That'll give you a nice overall summary of the company's financials and their dividends. And their dividends. You've got TipRanks. And financial projections. So